it is a fairly good start in the Asia Pacific.
For now, the NDA camp seems united as far as the current letter of support is concerned.
So the Nifty now needs to decisively close about 22,640. We're there. It's 20 points away.
Maybe taking some money off the table may not be such a bad thing.
100 plus on the Nifty, so 98, 86 tracking there.
The next 12 to 18 months, a lot of resources could be diverted to spur consumption.
A lot of our customers are maybe importing or maybe working to see how we localize.
Because we are assuming still broad macro policy continuity, which we are happy to continue with.
And the markets continue to roar. They're shining green.
We've constantly added new businesses and shifted our mix between existing businesses.
There's no real reason for RBI to move on rates just yet.
So in totality, the opportunity to add 300-400 stores is very comfortable.
A lot of key meetings taking place in the national capital.
They've come up from the highs, but we do have a lot of moving parts in the broader market.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that's the day so far, and it's once again a pretty exciting day with so much happening, a very vibrant screen all through from the word go this morning. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Surbhi here, Nigel joining in from the newsroom floor. Guys, hi, good afternoon.
Good afternoon.
Hi, afternoon in the green, but now off the session highs now. So the Nifty's lost about 200 points from the top. We managed to cross that 22,900 mark early in the morning, but now we're hovering around 22,700.
But for what it's worth, I mean, it's been a good recovery and an interesting texture of stocks once again that has been moving higher pretty much throughout the day.
You know, the rotation continues, right? Rotation into FMCG, rotation out of FMCG. And today it is a rotation out of FMCG. So the rotation was for 2 days. And this is what, we were talking about yesterday as well, that it seemed more like a sort of run to safety. Find a hiding place more than any great real expectation that this is going to be a big consumer-led sort of market now. At least that's the sense that we got. But look at the market itself, right? 80 points higher, which means we are off, 170 points off the highs? But it's still got 80 points on it, 85, 86 points. And this is the second sort of big swing that we're seeing for the day so far, holding its head above the 22,700 level even as we speak. Just a few other points before I sort of go any further. As I said, the recovery, of course, continues, but there is profit taking, which is kicking in at higher levels, basically. What is doing well? It's a combination of real estate. Real estate actually is a top performing index. PSCs, the public sector index is once again up. I mean, I think the last I checked, 2.5%, actually more close to 3%. What is taking a backseat is FMCG. I think it's one of the few indices along with the private bank index, which is in the red. And nothing large, but 0.5%, 0.6% in that, actually a little more now, almost 1% of the FMCG index there. And IT is doing better. I mean, the IT services index, have you heard anyone talk about IT services lately? No, except maybe Rima, right? But, 2 days in a row from the lows of Tuesday, I think it staged a decent move. And we'll sort of discuss this as well as we go along. That's the Nifty for you. Up, but also down a little bit. So, I mean, I think it depends on how you look at it and where you really got in. Rima.
Well, the Nifty Bank has just dipped into the red now. So you've got the first red tick coming through on the Nifty Bank. Let's pull that up. It had dipped into the red about 115, managed to recover, and now that's been sold off. From the day's high, the Nifty Bank is off by nearly 650 points. So banks are a bit under pressure. It's IndusInd Bank, one of the big movers yesterday, which has seen a bit of a correction. Axis Bank is down 1.5%. ICICI Bank is down 1.5% too. HDFC Bank is managing to hold its head up in the green, flat, but at least it's got a green tick. So the top Nifty gainer today is an IT stock. It's HCL Tech with a 3.5% gain, but even at Tech Mahindra and Infosys, both of them are up more than 2.5%. Outside of the index, many of the stocks which are perceived beneficiaries of the political mandate, they continue to rise. So Heritage Food, another 10% up. You've got KCP, 9.5% higher on that. Uno Minda, where there is some news today, that stock has gained close to about 15%. And then some infrastructure construction names like KNR, PNC Infrastructure. These are stocks which are showing you double-digit gains.
Absolutely. I mean, it's a very vibrant-looking mid-cap screen, actually, you'd have to say. Right throughout the session, even though the headline index, the Nifty is dipped, the Bank Nifty is negative, the advance decline ratio has been very positive. We still have over 2,000 stocks that are advancing at this point in time. And PSUs are retaining a lot of their mojo. I mean, it's pretty much down to the last hour now. But still, look at a BHEL about 9% higher, Mazgaon Dock about 11%, Cochin Shipyard, Garden Reach Shipbuilders. A lot of these PSUs still looking at double-digit gains. Beyond PSUs, some interesting names in the mid-cap arena would be, let's say, a Nippon Life, 10% higher on that stock. Cairns is up about 10%. We have stocks like Signature Global, 8-9% higher. So basically, there's plenty of flair in the mid-cap market. That is the short point. But index, Nigel, let's see. Let's see if it can go home with this 100 point or whether we're going to give that up by the end of the day.
Well, that's right. So it'd be at the start of today when we do that morning chat, I said that, the market is not for the faint-hearted. So today we have moved in a broad 300-point range. But if you wanted, at the gap up opening itself, which was around 150 points, you could have taken some money off the table and you would have been packed up. That's and as of now, the Nifty is up close to 100 points. So bang in line with that. Let's see how we end, because we'll have the weekly expiry factor as well that plays out. But this market's not for the faint-hearted. We have seen big moves in today's trading session. The Nifty Bank would have thought that's in the red. It was up more than 600 points earlier in the trading session. A couple of stocks that I'm looking at, Naval Limited, well, that one is up close to around 15%. I was looking at the EPS for the last year, it was close to around 65 rupees. So that one, in fact, is trading at sub 10 times. And last year it had a big debt in its books, which has come down to zilch. So that's one of the stocks that's on your radar as we speak. One of the top volume movers in today's trade. Just thought we'll highlight that one out. How do you position yourself for the final lot of trade? Mitesh Thakkar is back with us. Mitesh, that's sort of a seesaw day, right? Market's holding at around 22,700 odd, but we started the day at around 22,750. So someone who bought the gap up actually is not making much money. What's your view?
Good afternoon, Rajan. So I think, earlier in the day, the view was that we might find a supply around 22,900, 950 zone. We got a high of around 22,910. And I think that will define the upper ceiling. I'm yet to find the lower ceiling purely because of the lower, area, purely because of the fact that the market is extremely choppy. But my initial understanding tells me that, it could be as good as 22,500 to about 22,450 zone. So we might just chop around in this range, given the fact that the market doesn't seem poised for a big decline. It could be, settling down and, we'll see the volatility shrink, because on the intraday basis, I've seen the volatility indicators start to turn negative and on the lower side, and you would have seen that the VIX also has crashed in the last 1-2 days. So I think that's what we are going through. So as I said, it could be 22,950 to about 22,450, 500 on the lower side, and trading should be stock specific. We had highlighted earlier FMCG, auto, and IT names. I think IT was early today in the morning. I think that still remains the space where a lot of action is happening. I have a buy on Tech Mahindra right now. Buy here to stop at about 1285 and a target of 1360, 1365 can be looked at. And the other stock on the recommendation list, is LKI Mindtree, which I would recommend buying now with the stock just below levels of 4,720. A target of 4,880 is what I'm looking at.
Okay, all right. Thanks very much, Mitesh, for that. We'll sort of come back to you, but look at the good news at the bottom of the screen. Monsoon to cover parts of Maharashtra into Mumbai in the next 3 to 4 days. Oh boy, I mean, it's going to be relief, actual relief, right?
Because and until you get on the roads,
exactly. So that's what I was going to say. At least for the first couple of days, we won't, crib about it. We'll enjoy the rains and the showers. Nigel, what about you? Nigel already had a brief, a precursor yesterday.
No, I was drenched yesterday, so to call it. But yeah, I mean, looking forward to the monsoons. I thought today actually we were in for some rains, but doesn't look like. I mean, at around 1:30 p.m. I stepped out. It's not today.
No, I think it was in the morning. I saw a little bit of rain.
Yes.
But very light showers. So hopefully we'll get the proper stuff now, right? I mean, we'll over the next 3-4 days. That's essentially what the Met is saying. But let's. Yeah, sorry, Nigel, go on.
What goes with the first rains? I mean, when it
Nigel,
rains,
that's Friday. That's Friday topic. That's for tomorrow. We'll discuss.
Giant pakoras, right?
some nice samosas, I don't know what Surbhi is thinking. I was thinking some pakoras, some nice, garam chai.
Hot tea.
Yeah, hot
Same,
tea,
same.
exactly. Surbhi, I think, is already in Friday
Snacks,
mode.
no,
She's
no.
thinking about the wine, and I think, let's get back to
Okay, guys, back to the market. Yeah, we have a trading market right now, so back to it. We've got a lot of these PSU stocks that have been buzzing around, so let's just focus on them and then discuss that with our experts as well. Now, HAL is up and about. Not only, obviously, is the whole PSU flavor and fervor back for what it's worth today, there's some news around the company as well. HAL inaugurated a facility to support ISRO programs. So that's one aspect of it. And then CLSA came out with a note sounding a little upbeat on some of these PSUs as well. Upasna has more details. Upasna.
ISRO chairman inaugurates HAL facilities to support LVM-3 programs. Mind you, currently the existing capacity allows only 2 LVM-3 launches per year. This facility will support the production of 6 LVM-3 rockets per year. And mind you, post-election results, CLSA had written a note on defense sector wherein it has retained outperform rating on HAL with a target price of 4,731. It says that the expensive valuations leave little space for execution error. Company has also given a EBITDA margin guidance of 32 to 33% in next 2 years. And for FY25, the company is guiding for a order book of 47,000 crores, excluding the MRO division. As of 31st March 2024, the company's order book stands in excess of 94,000 crores, and company says that it is confident of maintaining FY24 growth momentum on the back of robust order book and strong order pipeline.
Hemang Jani is now with us on the show. Hemang, afternoon. First, your quick thoughts on your conversation with investors, what they've made of the week so far. It's been 4 days, but it feels like a lifetime, and we've seen some wild swings. Markets have been whiplashed. So what's the conversation? Is money going to pour in with the mandate that we have? And then come in on HAL and defense and what investors should do now.
Yeah, good afternoon. I think very volatile days and what kind of movement we saw on the exit poll day, and more so when the final results were out. I think the fact of the matter is that the IVs and the swings were massive. So I think traders were a little jittery as to what's really happening and what if BJP does not get the required number. But having said that, I think when we look at a larger spectrum of investors, many people were actually looking to buy into the dip, and many phone calls were there as to what one should really be buying into at this point of time. So I don't see investors actually panicking by and large, and they're looking out for opportunities and more importantly, from the pockets which have really gone down significantly in any sectoral rotation that one can really look at. So from an overall perspective, we think that now that market has come to terms with the fact that you will have a coalition government, the focus has shifted to what kind of sectors and themes one can participate in. And from that perspective, I think 2 or 3 things are emerging. One is, of course, the consumption rural-based theme. Other thing is that IT as a sector is seeing initial signs of bounce back. And we do think that given the way US markets is shaping up, and the way the valuations are looking, it would be a good pocket to look at.
Okay, so that's a sense on some of these IT stocks. Let's take a look at some more movers and shakers. Of course, all the FMCG names have cooled off quite a bit, but as have the banks. Most of the large ones are lower down the order today. Hemang, hi, thanks for being with us. Good to have you on the show. So I think the big debate has been whether this FMCG move was just a knee-jerk one or whether you really need to increase the allocation, and if so, by how much. So tell us, I mean, in a portfolio right now, what percentage sort of exposure would you recommend to FMCG? And then give us your top 2-3 picks as well here. FMCG/consumer, let me broaden the scope.
Yeah, so 2-3 points I would like to highlight, Surbhi. One is that it's not as if that only, let's say, last couple of days we are seeing action. If you see maybe, a month back also, when during the con call, some of the companies did indicate that they are seeing, recovery in the rural spend, and the overall volume growth could look better. particularly companies like Marico, etc. So there is a sense that you might see a bit of a revival, and particularly when you have monsoon, which are going to be out, let's say in the next few days. Coupled with the fact that the government may also try to do something for reviving the rural consumption, and because the election results are telling you that they need to do something, so that would create some sort of interest for the FMCG stocks. We like something like Tata Consumer, we like ITC, and to some extent Marico.
Okay. What about the two-wheeler theme? Based on expectation that there will be a rural revival, some thrust from the government to spur spending over there, consumption, income will perhaps go in the hands of people. Would you bet on two-wheelers, and how do the valuations stack up right now?
Oh, absolutely. I think two-wheeler has been outlier if you see last almost about 1 year now. Even the recent data point, last month, the growth was 25%. So if you are looking at a revival in the rural economy, better monsoon, some support from the government, surely I think this is going to be the big sector to look out for. I would go with something like Eicher and Bajaj. These are the two names that I would go with. No doubt valuation wise, because of the run up that they've seen, they're not looking very cheap. But I think as a theme, and particularly with the growth visibility that they are offering, I would surely go with it.
All right, Hemang, I request you to stay with us. Let's focus on a couple of stocks that are reacting to news updates that came in overnight. Century Textiles, that's flying away in trade after they talk about development of land in Gurugram. Sonal joins us to tell us what's going on there. Sonal.
Well, Century Textiles, wholly owned subsidiary, that is Birla Estates, has entered into a joint venture which is with Barmalt India Private Limited. They will be developing around 13.27 acre of land parcel for a luxury residential group housing in Gurugram under this particular joint venture. The development potential is approximately 2.4 million square feet, and it will offer them a revenue potential of up to 5,000 crore rupees. And remember, NCR is a region where a lot of new developers are entering. They're not new here, but of course they're expanding their footprint in the NCR region as well. Remember, the stock is up 67% in last 6 months itself, and adding on to some gains. So Street likes the expansion plans that they have in the NCR region.
Thanks a lot for that, Sonal. Well, Hemang, what do you make of this one? I think in the past we have chatted about Godrej Properties with Century Textiles. What do you make of this piece of news, and what's your preference in the real estate pack?
I think if you look at the kind of revenue that they're talking about, and the land parcel that they are sitting on, there is a sense that the actual monetization can be much more than what the market is pricing in terms of intrinsic value right now. So I think there is a massive re-rating that one can really expect when it comes to some of the real estate companies, particularly Century, Signature Global. Also, I think the stock is up. And they're sitting on a huge land parcel, and the market is not pricing in the current real estate market that they are getting at this point of time. So I would certainly go with Century, even though it has gone up. I think there is a case for a 30-40% kind of an upside. Also, some of the Bangalore-based companies, Brigade, Prestige, we do see a case of some sort of uptick over there also.
Okay. Century Textiles definitely in focus because of that expansion that they're looking at in the Gurgaon market in real estate. Hemang, last couple of days have been all about trying to spot Andhra stocks, right? Stocks that can benefit either through some sort of a direct political connect or maybe because of more progressive policies in the state. Nigel's been telling us about KCP, for instance. Anything on your radar? And would you, I mean, even though this might not be long-term fundamentals, but just in terms of momentum or riding the current wave, would you look at anything?
Yeah, I think all of a sudden people have started kind of looking at Andhra-based companies, and we're seeing a fair bit of momentum there. So I think something like a Sagar Cement, NCC, NCL Industries, I think these are some of the companies that one can look at, because typically when you see such a big political change, some companies tend to benefit, and that is how the markets are reacting to. So I think Sagar Cement in particular is looking quite interesting, because the valuation wise also it is cheap, and we think that you will see a good volume based growth over there.
And what about something like Amara Raja? I mean, there's been so much chatter about more direct political connects, right, in the promoter family and just general sort of equations over there. How would you look at that stock?
Currently, Amara Raja seems to be in a sweet spot because the core business, the automotive battery and industrial battery is doing well. On the EV side, they've lined up with a big MNC company, and you have political equations which are favorable. So I think surely Amara Raja would be one of the stocks that one can look at. The only issue here is that the stock has run up so much that you really want to enter in maybe 2 or 3 parts rather than just committing at one go. But surely Amara Raja is something that one would really want to have in the portfolio as a part of the small allocation stock.
Okay, all right. Hemang, if I heard you correctly, you spoke about NCC, KCP and Sagar Cement, right? The 3 cement companies. Hemang?
Nigel, I missed your question.
Yeah, so I think you spoke about 3 cement companies, right? Sagar Cement, NCL as well as KCP because of the development of Amravati, if I got that correct.
Yeah, I talked about NCC, which is a construction company.
NCC, got it.
NCC. Sagar, and there is a small cement company, Nigel, NCL Industries, which also is Andhra based, and it is 40-50% cheaper to some of the mid-cap cement companies.
Right, Hemang. I recall when Mr. Naidu was in power around 5 years ago as well, these same companies were in focus at that point of time. So let's see what's the Amravati capital plan that's laid out. Wanted to ask you about these power financiers as well. REC, PFC, they've been big actually value creators, but from the top they've fallen quite a bit. Some believe still valuation-wise there is support. Your take?
I would be very selective here now that the entire, that PSU and Modi stocks, the re-rating and the exuberance that we saw, now I think that seems to be that story is over. So we should not try to stretch it beyond a point. Valuation is a relative game. At one point, so many companies in the PSU and PSU banks were value picks, but they did not do well for empty number of years. So I want to stay away from these names. Maybe selectively you can have some companies, either defense or the commodity-based companies, depending upon what you like. But let's not try to stretch our portfolio in terms of exposure to PSUs.
Got that. By the way, there is a news flash coming in, which will tell you that the Prime Minister Modi's swearing-in ceremony may take place on the 9th, not on the 8th. 8th is a Saturday, 9th is a Sunday. So it will happen on the 9th at 6 p.m. in the evening, and we'll put this up for you in just a bit. And, this is, of course, sources to ANI. The Newswire is reporting that the swearing-in for Prime Minister Modi is on the 9th, Sunday, 6 p.m. That's essentially what's come through. Nigel, you want to add something?
It's going to be an action-packed Sunday evening then, Prashant, because PM Modi takes oath yet again. And later that evening, we have India taking on the might of Pakistan at 8 p.m. So it's going to be a late evening. It's going to be in the United States. So that match will end at midnight, I think. So it's going to be a
I think it should be the finals, French Open finals as well.
Yes.
I think. Because
Sunday will be the French.
Right? Sunday should be the men's final. So a lot happening and a lot to choose from. As well. Okay, I think we'll take a quick commercial break here. We'll come back and we'll have our Alpha manager with us. Rajesh Kothari is Managing Director at Alpha Accurate Advisors. He'll be joining in on the other side. Stay tuned. Welcome back. We got okay, the flash is finally on the screen, which I was referring to before I took that break, which is the swearing in for Prime Minister Modi on Sunday at 6 in the evening. That's the news which is coming in. This is still sources, but this is what we are getting at this time. Well, PSUs are back again, back in action, and how? So let's just sort of track this journey from pre-election levels, the lows that we saw on Tuesday, the election day, the election verdict day, and then of course what's happened since. Hormuz is standing by, he's put these together, and not just the price action, but a lot of the views on how they've changed over these last few days. Hormuz, over to you.
There was a time when PSUs were all over the street. Everyone spoke of nothing but PSUs. Now, the street darlings, as they were, saw retail investors pile in to ride this momentum at whichever price possible, float or no float. The result is there to see. Now, take a look at this graphic that comes up on your screen. These are the top 5 gainers on the Nifty PSE index starting 2023 till the 3rd of June, which is the day before the Lok Sabha elections were declared. REC and PFC up almost 5x, HAL up almost 4x, BHEL and Oil India as well among the outperformers. There are other non-index names as well which have risen anywhere between 300 to 400%. But one election result has changed everything. The BJP fell short of getting a majority in the recently concluded Lok Sabha election, but the NDA did. Yet, PSUs have been the worst hit. Now, in the blink of an eyelid, the street suddenly began to question this entire up move. Here are some of these views. Now, MK has said that they are exiting all PSUs and companies with a weak earning structure. UBS said that these rich valuation assumptions might come under question, and as a result, they are underweight on India as a market. Now, CLSA has not said anything about the entire PSU space, but they downgraded BEL, a PSU, saying that their valuations are expensive. BEL has been an outperformer too. Now, JM Financial has a buy recommendation on SBI, but it says that the valuation derating, a case for that may emerge only due to macro risks and a relapse of credit worries. Now, Jefferies was one of the big overweights on PSU stocks, and it has cut that overweight position on these PSU names. And HDFC Securities also said that it expects some PSUs to see a contraction in their multiples. And the result was there to see in this case as well. Now, REC and PFC, the high flyers of 2023, fell over 20% on the 4th of June. BHEL, SAIL, Bharat Electronics all declined 20% that day. The list doesn't end there. Concor, a disinvestment candidate, GAIL, ONGC, NTPC going through a demerger, a new listing upcoming as well, all fell between 15 to 20% that day. But there is some bit of recovery starting that day itself, and it continues through yesterday and today. Now, REC and PFC are both up 20% from their respective lows, as are BHEL and SAIL. But despite this slight recovery, most of these stocks are still well away from their recent highs. Now, REC and PFC, which reached levels of almost 600 before the election results were announced, are yet to cross 500 after Tuesday's drop. Same is the case with BEL, BHEL and most of the other PSUs as well. Now, lastly, the extent of this run-up was such that despite such a drastic fall on Tuesday, most of these stocks are trading well above their 5-year average multiple. REC above, PSC also on the price to book front, BHEL, SAIL as well, BEL at 50 times multiple now, or the 5-year average is 31 times. So PSUs were in the news then, they are in the news now. The reasons may have changed, the narratives may have changed, but just like the voter, the investor has the final say.
Okay, all right. Thank you very much, Hormuz. Indeed, it's been a breathtaking move on these stocks, gravity defying. Sometimes, it's hard to decipher. But then it is what it is, and that theme is still on. Very interesting. Prashant was just looking at the flashes as well. I think in a bit we'll have Parikshit join in to talk about the swearing in and the issues at play. I guess they say, right, there's in life, there's a first time for everything. And I think for Prime Minister Modi, this is going to be a first. Coalition politics. I don't think he's done that in Gujarat. I don't think he's not done that at the center. But now, as some of these inputs that Parikshit is getting are indicating that someone wants the infrastructure ministry, someone wants the railway ministry, and these ministries are extremely critical to the way market men are viewing the whole setup.
On a lighter note, Surabhi, I was talking to somebody, and somebody in the market only said this entire concern that, he's never headed it all the time from the time when he was chief minister in Gujarat, right? That he's never headed a coalition, has always been majority, right?
Yeah.
So the gentleman said, well, that's because the voters never gave him a chance to run a coalition government. So look at it like that.
So they now have put him up to the challenge.
To say that, that he's never run, it's, that almost sounds like a shortcoming. But the fact is, it's never, the mandate has always been one of majority.
So there's a first for everything, as they say.
But there was another journalist who said that yes, he's never had to negotiate with an ally, but even internally within the politics, there is a lot of back and forth and negotiation when it comes to deciding who gets what in an allocation. So it's not that it's a job he will not be able to do. So don't write him off and saying that it's going to be difficult. He will manage. It's not done. He has to do it internally very often in the party also.
And let's not forget, I mean, he's got 40 years of political experience, grassroots level political experience behind him. So, I think we'll have to watch this.
Well, Rajesh Kothari is with us, Managing Director at Alpha Accurate Advisors. He's with us. Rajesh, good afternoon. Good to have you with us here. Thanks very much for your time. I should say congratulations. We were chatting briefly and you mentioned that one of your core holdings is up 6x today. So I'm not going to ask you which one is it, but congratulations. And, you've done well. And you've done well while avoiding some of this, high beta, very high momentum, which is all the rage. It includes metals, PSUs, oil and gas, energy, etc., etc. So yeah, I mean, well done. Rajesh, but what from here? We're speaking for the first time after these results, etc., came through. Markets are looking much better, of course, as compared to what they were doing on Tuesday. What's your sense? Does anything change?
So thanks, Prashant. I think three important things from the election outcome. The one things what probably is not going to happen, probably will take backseat, is any land reforms or labor reforms or PSU divestment. I think we need to forget about it, at least for the time being. Second very important thing is unemployment, I think was a major issue, and therefore the thrust on manufacturing will continue. So that thesis one should keep playing on. The manufacturing side will keep doing well. But importantly, the third thesis, which is the focus on spending, focus on consumption expenditure, I think that has probably a little bit taken a back seat, and that has to come back in the front row. So I think these are the three broad observations from the political perspective. From the market perspective, from the beginning of the year, our theme is be bullish but be prudent. I think the risk management is going to be extremely important as market enters into more volatile zone. Please remember, the coalition government means more headlines frequently. Some headlines market may cheer up, and some headlines probably many stocks may go down 10, 20, 30%. So, and those headlines will keep changing every week. So you need to pass through, you need to navigate those kind of volatile times. Market will keep delivering you returns, but what you own as a sectoral level and what do you own as a stock level, and more importantly, what you basically do not own, that basically will decide. So I think the quality will take front seat and momentum will take back seat. Please remember, last 18, 24 months, it was a throw the dart and make the money. I think next 24 months are going to be different compared to what we have seen in last 18 to 24 months. And that basically means we need to extremely remain focused on good quality, good growth, good governance, and play reasonable valuations, don't overpay, and be agile. If you think that you already made reasonable money, then probably one can move and focus on something else. So I think that's basically going to be the broadly how we look at the market over next 6 to 12 months.
Okay, all right. Rajesh, stay on. We have more questions for you, but let's also address, of course, the all-important updates that Parikshit is picking up with respect to the swearing in of the Prime Minister and, of course, the tussle between, I shouldn't say tussle actually, the discussions, let's use a better word, discussions on very important ministries. Parikshit, what are you picking up?
Well, we're now hearing that the swearing-in ceremony is likely to take place on the 9th of June between 7 to 7:20 p.m. This is what we're picking up from our sources in the government. The NDA 3.0 cabinet will have a significant representation from allies because this time the BJP has not formed the government on its own. The situation is very different. So from offering MOS rank posts to key allies last time around, the BJP will be offering key cabinet berths in the union cabinet to allies like the JDU, the TDP, and also the Shinde Sena. So let me give our viewers a sense of what are some of the asks right now. There was some speculation about who the speaker post will go to. We learned from sources that the BJP is likely to retain the speaker's post. And we've seen during Om Birla's tenure how the speaker plays a very important role during the passage of key legislations in the House. So the BJP would like to have that control with itself. The JDU and TDP want the NDA to follow a common minimum program, an agenda after the government formation. They want contentious issues like Uniform Civil Code, Agniveer to be reviewed and maybe set aside and follow an agenda that is comfortable for all. The view is within the JDU that whatever is not comfortable for people in Bihar and also for a state like Andhra Pradesh, please don't bring it to the table. Please keep all contentious issues aside and work only on those issues which are agreeable to all allies. So this is where the BJP might find some difficulty. There will be no rethink on things like Article 370 because those are already done and dusted. They have been supported by the allies. Also, when it comes to one nation, one election, the JDU supports it. When it comes to cabinet berths, the JDU has sought at least 4 cabinet berths, and this includes agriculture ministries, rural ministries, Panchayati Raj, infrastructure, economy, road transport. So a lot of asks there, and we're told that they may even settle with 3 key economic ministries. The TDP similarly has asked for important rural, agriculture, economic and industry ministries. Let's see what what happens in the next few hours and tomorrow. The LJP, which has won 5 seats, has sought 1 cabinet berth and 1 MOS rank post, but they can settle with 1 cabinet post as well. NDA MPs will be meeting in Parliament tomorrow at around 11:30. After that, all the NDA leaders will go to the President's house to give a letter of support to show that they are supporting the BJP-led NDA alliance and they should be welcomed to be forming the government. And the swearing in will then take place on the 9th in the evening. We're also getting to know from some of our sources in the NDA camp that the BJP is confident of getting support of independent MPs. Those talks are happening all across the country. We remember that there are 18 such candidates who are not affiliated with any political party, any mainstream political party. And some of them may be either inducted into the BJP or their support may be taken. And we may see those numbers. In fact, there is confidence that the NDA's overall tally may go up beyond 300 as well.
Okay, thank you very much for those important updates. Still in conversation with Rajesh Kothari, Managing Director at Alf Accurate Advisors. Rajesh, how crucial will be the positions which will be given, the cabinet positions that the street is watching out for? And suppose if the key ministries of railway, infrastructure, digital India, they go to the allies, will there be a rethink? How would you approach this?
Well, I think, it is too premature to right now think about it because the names are not yet announced. But I think at a broader level, the government basically will decide the action point for each ministry. And irrespective of whosoever is sitting on the driver's seat, it is just not driver is going to drive, right? I think the entire thing have to go together. So, there are few important, that's why I say the manufacturing thrust will continue. So think from the market perspective, and I'm forgetting everything else. Let's focus on market. So manufacturing thrust will continue, number one. The power is something very, very important. Electricity is basic need. So you cannot tamper with power. You cannot tamper with transportation. So, making of roads or making of railways or making sure that power is available to every citizen 24/7. I think this is non-negotiable. But within that, very importantly, I think what we are doing, at least from our portfolio perspective, we are avoiding the power finance companies, correct? Because remember the days when there was an issue with the SEBs, they became a loss-making company. And there are a lot of things, NPA happens. So power will be there, but whether it will be profitable or not to the lender or to the generator, that's something is going to be a little bit, we need to think through it. So for time being, probably our thought process is avoid names where there can be risk. And at the same time, there are a few things which probably will continue to accelerate. So for example, as I said, the manufacturing theme, that will continue. So on that side, we are more focusing on consumption. We are more focusing on manufacturing, and of course, then there are others which has nothing to do with the election. Say, for example, automobiles or auto ancillaries or pharmaceuticals, which are the very reasonably attractive valuation. There are a lot of other things on the market apart from just playing the election and the government related policies. There are many things else as well.
Okay. Rajesh, just to sort of sum things up, now as we are moving towards the budget and we have more clarity on who's heading what ministry, what will be the overall construct of your portfolio and changes, if any, specifically towards the capex and manufacturing theme? So if you could just break it up, I mean, overall, how much would be defensive, IT, consumption? How much would you still keep on the more aggressive side, more richly valued stocks in manufacturing and capex?
Good question, Shulbi. So automobile and auto ancillary is about 9 to 11% of the portfolio across by both AAA IOP as well as AAA budding beast strategies, and they are doing extremely well. More electrification of the vehicle is continuing. It means more sensors, more cameras, more airbags, and many more such things. So that remains a good part of our portfolio. Our second big holdings, of course, is consumer, where we own anywhere between 15 to 18%. And I think with this government new thrust on the rural economy revival, apart from that, of course, the normal monsoon, which is predicted by IMD, that argues very well for the overall consumption as a theme. Here we own both consumer discretionary as well as consumer FMCG. And I think they both are going to do very well, because of the revival. The third important piece, of course, is the banking and finance, which is about 26-27% of the portfolio. But here, basically, we are holding more private sector, whether it is a private sector banks as well as NBFCs. We also hold very selective 1 or 2 PSU names. So this is 28% of our IOP portfolio is the banking. Fourth is the pharmaceutical, which is, again, we are very positive on this theme from last 3 to 4 months. And then the fifth comes, the capex related themes. But in capex, we are just not playing the India. We have selected the businesses which have very strong India business as well as very strong export business. And they are seeing tailwinds on both the sides. So more product portfolio kind of a companies, which is again less dependence on government. Of course, there is a dependence, but the dependence is a little bit lesser rather than playing, pure PSUs. So that's basically the, capex side. And then, of course, we hold about 9 to 10%, software. So it's a fairly diversified portfolio without much dependence on one single sector in a big way. And of course, within that high growth and best of the balance sheet. That's how we are constructing the portfolio.
Right. Rajesh, do you want to, since there's so much has happened, so much dislocation within stocks, etc. has happened, I just will read out this flash. ITC shareholders have approved the demerger of the hotels business. So that's essentially the news which is coming through. And I think that's very well advertised. But now this needed shareholder approval, and it's kind of come through at this stage. Rajesh, in terms of specific, 1 or 2 ideas, if you want to discuss, I mean, just to tell our viewers how you're thinking about these things now. I mean, would you want to do that? Because, I mean, stocks have moved quite a bit, quite violently over the last few days.
I think that violent move, what you are ascribing is more towards the PSU basket rather than to other baskets. And I think very important is you look at 31st March stock prices and you compare today, rather than Thursday, Friday and every day, because otherwise you need to be nowhere. And still you will see there are many stocks which are done extremely well. And there are enough opportunities which are still available at a reasonable growth and reasonable valuation. Like auto ancillary I'm talking about, like one of the company which is a core holding, which we were discussing, like Uno Minda. Please put a disclaimer. We are holding this company, correct? Now, forget the case in point of specific company. But if any global company coming to India would like to have a great market share, there are hardly 4 or 5 ancillary groups to whom we can approach. So when you're basically having a portfolio of companies, be it a Uno Minda or be it a Gabriel or Anand group, these are the groups who can basically, cater to your requirement if you're coming from Japan or if you're coming from US or if you're coming from Europe. These are the guys who have the capabilities, technological bandwidth, they have a right balance sheet, debt-free balance sheet, and they have great plants and great labor and so on and so forth. So I'm saying one needs to think through like that. And those are the things where you basically can make, huge multiplier returns. Unfortunately, we cannot talk stock specific more because of the regulations. But that's basically the overall thought process, while selecting the companies.
Okay, since you did mention, and of course you put the disclaimer yourself for Uno Minda, where are valuations at, Rajesh, something like this?
Well, valuations are expensive, from a traditional perspective, but moment you put PEG in your framework, then valuation probably will look a little bit reasonable. Please understand, the EPS, what Street is assuming, where generally Street goes wrong is that because once you have a new joint venture which comes in, all of a sudden your next 2 years, 3 years, the visibility after 18, 24 months is completely different. Your size of opportunity, for example, the new joint venture, what the company has signed, the content per vehicle is completely different compared to where are you today. Am I right? So it is a 3x to 4x increase in size of opportunity. Your TAM, the total addressable market size, therefore, goes up meaningfully. It is not a small steps. And likewise, if you keep adding, like Gabriel, for example, we are holding this stock. Please put a disclaimer. Now, moment they added sunroof, they are number one in shock absorber, top 3 player in shock absorber industry. And then they added sunroof as a second category. Again, they are going to become top 3 in sunroof. Now, if they get like this 1 or 2 more over next 4, 5, 7 years, which is possible, think of it, what will be your EPS, correct? So sometimes you need to go really deep dive and think a little bit, out of box, think a little bit strategic, a little bit long term, and that can probably help you to, make a little bit extra alpha compared to the normal market returns.
Okay, no, absolutely. Take that point. We had we had Uno Minda, of course, with us. I'm not sure if you saw the interview in the morning with us, and they did talk about the sort of opportunity that they see. They didn't, of course, quantify numbers per se, but they did give us some numbers, and we'll have the sort of details up for you a little later. Thanks very much, Rajesh, for joining us. It's a pleasure, as always. Let's focus on some specific sort of brokerage notes which have come through post-election outcome. CLSA has come out with a note on sort of capex plays. Jefferies is talking about housing, affordable housing, as a bit of a theme from here out. Sudarshan has got details on both these. Sudarshan.
So brokerage notes have started flowing in for the sectors that new government may focus on, or sectors that can be amongst priorities in upcoming budget. So first one is CLSA on capex. CLSA says its channel check suggests that government in its 100-day planned agenda may talk about large orders that can be identified to be placed across defense and infra domains. And this large order placement, as per CLSA, would reassure investors, and likely demand for more capex for the two states, that is Andhra Pradesh and Bihar, should revive state capex as well. And CLSA believes L&T, IRB, HAL, NCC and J. Kumar will be key beneficiaries of increase in capex at both state and at central level. Next one is Jefferies on housing finance companies. It expects government to announce revamped affordable housing segment scheme in budget, and it says revamped scheme could improve housing loan demand, especially in affordable and mid-ticket segment. Earlier affordable housing scheme constituted 48%, 23% of Home First's and Awas disbursement over FY18 to FY22, and large housing finance companies like LIC Housing and Canfin also see some tailwinds from the scheme if the loan cap is raised in the new schemes. So preferred picks for Jefferies are Home First and Awas in affordable segment, and Canfin and LIC Housing in the mid-ticket segment.
Thank you very much for that. By the way, the Nifty Bank, which had dipped into the red when we started the show at 2:30, is now up close to about 250 points. Today is also the weekly expiry on the Nifty. So maybe that's the 3 p.m. move that's playing out. But now the Nifty Bank is up close to about 200 odd points, 0.4% higher. But outside of that, ITC is also inched up on the back of the news about the shareholders giving their go-ahead, the green light for the demerger of the hotels business. ONGC, Bharti Airtel are two other stocks where the gains have now exceeded 2%. We will slip into a very short break on that note. On the other side, a few BTST calls from our technical experts.
Welcome back. Well, a few stocks actually are bucking the trend. Biocon is up 10% as we speak. Nippon Life is up 13%. So big moves out there. And United Spirits, well, it's been one of the big winners for the week itself. It was trading in the red at the start of the show. United Spirits seems to be saying cheers. That stock has moved to the high point of the day. Midesh Thakur is back with us. Midesh, what's your buy or sell call that you have for us?
Nigel, I have in fact all buy calls, given the fact that space like technology and FMCG continues to do well and is on radar. So I have a BTST on McDowell's or United Spirits, which I would recommend buying or taking a BTST position with a stop just below levels of 1300 for target of 1340. Persistent is the other one, which is a BTST with a stop at 3660 for target of 3745.
Thank you very much for that. Now let's get to the big event which is upon us tomorrow. The RBI's Monetary Policy Committee, MPC. The meeting is actually currently underway. The policy decision is due tomorrow. Now the CNBC-TV18 poll is expecting a status quo policy with the RBI maintaining its stance of withdrawal of accommodation and no change on the rates front. Ritu joins in with the details of the poll. Ritu.
Well, this may be a bit of a wait-and-watch policy because it's squeezed in between the recently concluded Lok Sabha elections and the full budget that is only going to be presented in July. But more importantly, you have a strong growth print, inflation is still ruling above target, and the US Fed is not really itching to cut rates. So there's no real reason for RBI to move on rates just yet. And so this time around, what the markets are going to do is focus on other things like what the central bank says about, one, liquidity, because, systemic liquidity continues to remain in deficit, even though you have that government surplus cash balance as the elephant in the room. And the second one on inflation, because the last mile of disinflation is taking a tad longer than what was initially expected. But that said, no one is expecting, of course, any change in the repo rate. So a status quo policy for the 8th consecutive time and no change in the stance, which is also likely to be left at withdrawal of inflation, withdrawal of accommodation. Now, none of the economists that we polled expect any change in stance before August, in fact, and the majority are expecting the first rate cut to only happen in October or some even later. On the macro front, the inflation is expected to be left unchanged, the forecast that is, for the year at 4.5%. Now, keep in mind, inflation has been moderating at about 4.8% in April, and core inflation providing some comfort to the MPC, but the high food prices, they continue to remain a spot of bother. On the growth numbers, however, they're likely to be revised up from 7%. A majority of the respondents said it could be anywhere between 7 to 7.5%, but many are even expecting it to be left unchanged. The tone of the policy is expected to be absolutely even because there's no real change from the last time around. And finally, to end with what we started with on liquidity. Now, markets want to watch out for any measures RBI may introduce later to regulate the changes in liquidity from any passive inflows that come in from index inclusions. And of course, they expect RBI to continue managing liquidity through the main and fine-tuning operations as needed.
All right, Ritu, thanks very much for that. So that's a big one tomorrow, the RBI policy. We'll take a quick commercial break here. We are back with more on the other side. Stay tuned.
Welcome back. Well, a few stocks are doing quite well, but we have Gurmeet Chadda who joins us on the show of Complete Circle. Hi, Gurmeet. Good afternoon and good to see you. Well, some of these NBFCs are doing well in today's trading session. Anything you like from that space?
So we like the housing finance space. I think the Bajaj housing could be a bit of a trigger for some of the other housing finance space, and I think there's an upcoming budget. Government will focus on affordable housing, especially in rural and semi-urban in states where the performance has been slightly subdued. So Bajaj Housing, for example, could re-rate some of the other ones also. So there's something like PNB Housing has a 63,000 crore loan book and trades very reasonably at 1.3 times. And capital adequacy is almost 30% versus, let's say, Bajaj Finance at 22%. They have shrunk their corporate book to less than 2-3%. 98% is now retail. And they've opened almost 100 branches, so nicely positioned there. We also like Aditya Birla Finance, the holding company, because of, one is the change of leadership with Vishaka coming in, and a lot of changes happening, in both the NBFC where the AUM is around 1 lakh crore, as well as the asset management arm and other businesses. So these are the two spaces we like, and I think some of the better run ones, once the cost of funds drops, which is more probably medium term, like the Poonawalla, the Bajaj Finance, the world will probably start gaining some traction. They've been a little subdued in this round.
Gurmeet, afternoon. What about Uno Minda? They've entered into a technical partnership with a Chinese-based company which expands their presence, addressable market in the EV four-wheeler space. They're anyway pretty strong in two-wheelers, but now they're tapping into four-wheelers. Is this a very big positive for the company? And with the up move that we've seen today, 15% up, I think, is the stock pricing in the news?
Yeah, it's incrementally positive. See, other than the EV portfolio now, with this tie-up, they get very aggressive with powertrains, EXL, the inverter chargers, etc., which is the EV part of the portfolio. So there are three portfolios, Rima. There's one is a convenience portfolio, which is your switches, the power window switches, the horns, the lightings, right, which they are very, very dominant. Then is your safety portfolio in the car, which is your sensors, airbags, etc., where again they have a 15-20% market share. Sensors, they have actually more. And then there is a premiumization portfolio, which is more content, more features, which is your alloy wheels, infotainment systems, the touch screens, etc. of the world. So they cater to everything. And that's why if you see the kit value now, which in 2016 was 2,000 rupees a car, is now upwards of 30,000 and likely to go up. It's been more than a 10 bagger for us personally. I've invested in this company for very long now. So happy to see the movement. I think it was a little subdued versus other auto anch, probably in the first half or the first 2 months of the year, and now probably seems to be catching up. So very solid company. In fact, I personally think it has the potential to hit 1 lakh crore market club in next 2 or 3 years.
Okay, all right. Gurmeet, what about waste and water management? There were a couple of themes that you were playing out there as well. Tell us more about that.
Yeah, so I think it's a genuine environment need now. I think if you look at, for example, water desalination with the kind of coastal line we have, there's a huge opportunity. There are government initiatives. Then if you see, for example, the sewage we produce, we only treat 28%. We probably end up producing 80,000 MLDs of sewage. The treatment is hardly of 30,000 MLDs. So I think there's a big requirement there. Also, the manufacturing water is non-usable once it's used for manufacturing. You can't use it for watering, etc. So the whole gamut of treatment of water, reuse, salination, I think is something which really attracts us. So we're monitoring VATech Wapak there. Then there is a government ruling on use of recycled plastics. You need to now use 30% recycled content in PET bottles, in the big drums, etc. And then there is a fine of almost 5 rupees a kg starting next year. And it goes up incrementally, which is a huge dampener for companies which are in beverages and paints, etc. So we like their Ganesha ecosphere. And I think this could be a very secular theme going forward. And the companies are pretty small in this space. So there is an opportunity to enhance margin as well as increase top line, which is a perfect cocktail to re-rate the stock as well.
As we're coming down to the final leg, this resurgence has been very, very smart indeed. The day's high was just around the 22,900 mark, 910, 22,910 to be precise. And the market's not too far away from that. So it's a good move. And it's telling you that the mood is buy the dip. That's what's really playing out. Gurmeet, finally, just before we hit, actually, I think we'll have to start wrapping up because we are down to the last 1 minute. So just stay on. Let's look at the final rates then as they're coming through. 232 points higher on the Nifty. It's turned out to be a good day. This is a market that's now once again just 2% off the all-time highs. And the sector rotation has been the interesting facet of today's trading action because it's not the follow-on buying on FMCG, but a complete reversal back to the mood around PSUs. The CPSE index, for instance, that's been the tall star today. The CPSE index gaining about 3.3%, for the day. And the PSE index, the Nifty PSE index, up almost 4%. So that tells you, who the stars were. And then there was a late tech rally that was very smart indeed. So the top winners on the Nifty, Tech Mahindra, HCL Tech, Shriram Finance, SBI Life and SBI, both the names from the SBI stable doing very well. There was NTPC and Aisha Motors and Infosys. So a very diverse set of stocks which was taking the market higher. Of course, some cool off in the consumer names.
Well, the mid-cap index outperforms handsomely, 2.5%, very strong advance decline ratio. 13 stocks advancing for 2 in the red. So the mid-cap market was very vibrant. But a quick word on the large caps under pressure. Most of the consumption names, as Surabhi was pointing out, HUL, Asian Paints weak, Nestle ending in the red, and Hindalco down 2.5% too.
It's a long list of big volume-led gainers, right? And you guys mentioned some, but the list is really long. Nazara, went up 15% by close. That's a very large volumes. So, and that's the other thing, right? Volumes for today as well. And NSE yesterday put out some data saying that they handled some of the largest volumes the day before. And I think this week generally has been, every day records with regards to the volumes traded. JBM Auto, of course, VATech Vabag is another one. VATech Vabag has finally now really broken out into a new high. Big 14% rally there on that one. Large volumes there as well. AG's Logistics, I think we mentioned. Brigade, Exide, big day, NCC, PNC, KNR Construction. These are all sort of, construction companies, contractors largely. And of course, you had names like Cochin, Mazgaon, BHEL, the PSU space, which did very, very well today as well. So it's all in all, fantastic kind of a day. We were yesterday talking about how Friday to Friday, week so far, as of yesterday's close, we were flat. Well, we're not flat anymore. The Nifty is up 1.5%. When mapped from last Friday's close. That's about 320 points after everything's said and done. So it's turning out to be a good week as well. I think we had to wrap up things here. So it's goodbye from all of us and the Closing Bell team. Thank you very much for staying with us. But action continues. Markets forward coming up next. Stay tuned.